The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Now, I'm not sure, let's see, I know this is not the Friday, technical Friday in the Chapman wave, but I'm just going to say that if the E-mini right now down 16 at 26.31 is able to hold above the low that was made at about 6 minutes past 11 Eastern time at 26.50, and actually close on any 2-minute bar for two-minute bars. I prefer consecutively, but it should be 2 out of 3 times. So it's over a 6-minute period in a 26.36. Oh, anywhere in the 26.36s. Then that 200-period moving average of 26.39 would become a target. What's really important now is that down 262 in the Dow at 23,890. This is now below the key 24,000 level, actually below the 23,990s, which should have been some kind of a cushion. So here at 23,976, 876, we're decisively below. That tells us a whole story about this, the daily and the weekly sell modes that I've been telling my subscribers. That's what we're in every weekend when I send Saturday, when I send out those charts of the Dow, the daily, weekly, monthly, plus the analysis over that weekend. I've been talking about this for some time. It's really important to get the larger tide. So with that in mind, let's just run the numbers. The E-mini is down 17. It's testing a trend line support that goes from the 25.52 low right at the end of March, beginning of April. And then it hits the low of 26.11 that was on the 25th of April. And here we are testing it. If we break that, the next level of importance is 26.19. And that is the 200-period exponential moving average, that orange color line there. That is a very important moving average. The close below that says, here's the second major arch formation in the daily and the second arch formation in a weaker arch in the weekly charts and the daily, weekly. There's that thing. And we had that peak E-top I spoke about yesterday at 26.8225 in the 120-minute chart. The MACD is very negative. Stochastic is at 8%. This is kind of where you would start to see in the W formation at the bottom some kind of support. So let me just go back to this just for one brief moment to say this particular pattern we're looking at, which has now disappeared, in the 2-minute chart. Well, it's in all the charts. 2-minute, 5-minute, 10-minute. Very important to hold that low that was made at 26.50 right there. And that was made, as I say, it's 6 minutes past 11. A break under that says, you know what? Something else is going on. Now let's talk about that as we move along. You've got the Dow. No, I didn't want to go there. I wanted to go here. You've got the Dow at down 281 at 23,882. It's broken a trend line support. That's the support we're looking at. The E-minis, this one's already broken, but it hasn't broken enough to go to the 23,700 level, the 200-period exponential moving average, the orange moving average there. I've drawn this for subscribers to show that inverted V, making a second arch to call it a lowercase h to a lowercase m formation, has this target line on the this gray dash target line as support, and the MACD is at 28%, but very flat, not doing much. Stochastics at 28%. The MACD is very negative. Stochastics is attempting a rally, but it's really struggling. And we'll get rid of, we don't need this 120-minute chart anymore, other than to say that it's at 34% in the stochastic. I suspect if we go a little bit lower before we have substantial chance of a turnaround. It's that monthly. The monthly yesterday made at the end of April. This candle is a doji candle on the way down after a Chapman wave Roman candle. It's just real simple in my technique. This is not Steve Nissen's technique. He's the expert that brought into the United States the whole concept of Japanese candlesticks. I listened to him for years, and then I just found, there's just too much going on there. I can't do every single candle. Not only that, it's not the candle, it's the next candle that tells the story. I just found that I have maybe 3, maybe 4 different candle formations. 2 of them are my own invention, creation. Not an invention, but a creation. Analysis. And this one here is the long-legged, well, it's already a doji, it's a monthly. It's getting to be a long-legged doji, but that's not the issue. The issue is that it closed above the 9-period moving average in April. My contention is when you have this kind of pattern, a close above the doji wick high or low for 1 bar after that original doji, that'll be this candle in May, suggests that the candle itself, that is the open and close area, should be tested in the second candle after the wick is made, after this doji candle long wick is made. And then if it goes back up, if there was a close above and the next candle has a pullback, touches the 9-period moving average, in this case, that would be around about, depends where we close, around about 23,852, and then closes again for a second candle after this doji, you're going to be going up. But if it doesn't, or if it doesn't even close above, that's a big negative because the major trend is still on the downside, and this becomes just a refueling stop in doji language. And what we're looking at is 23,344. A close below that says that both the 9-period moving average and the little doji candle of last month, that's yesterday, the close of 24,163, that becomes a repellent zone. Make it real simple. The outer points of the candle give you very big guidance. The MACD hasn't crossed negative. It's real close, but it hasn't got a whole month in which to yes or no, close below. And the stochastic's down at 68% negative, but the on-balance volume is holding real well. And if you see the little RSI, the relative strength index, not good. All right, enough with that. Now what we're looking at is the S&P. S&P, so the Dow's down 1.11, S&P is only down percent, and the S&P is only down 0.54. The pattern here is a little bit more positive here. We've got this trend line. Let me just draw it in. The most important trend line that we can look at is right there, and that says the S&P must hold between today and tomorrow. It mustn't close below 2622 to 2620. A close below says, uh-oh, you're going to test the 2609 200-period moving average. And the MACD is negative and the stochastic's negative in the daily and very much so in the weekly. This is tough stuff. Let's go to the cues as we're about to go to our break. Unchanged, 160.93, which means I must look at the semiconductor index, up 56 cents. Starting to see a little bit of a divergence here. First real good sign in 12 hours, 24 hours. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I want to get through this now because I got a bunch of questions and some really good questions. So here we go. The SMH is up 45 cents since 97.61. Aldo sent something in saying, what did he say? Bought the SMH at 97, green all morning while Dow up, down S&P down hard. SMH is telling a story, could be a bottom. Thanks, Basil. You know, Al, I'm in a sense, I'm in your camp because I'm looking at this as a very oversold sector. We don't have a trade. I've been waiting to see whether or not I want to even think of playing a balance in the SMHs or just wait for my next shorting opportunity, because that monthly chart is suggesting to me that there's a really good chance that we've made some kind of a hat trick top in the SMHs, implying that you've maybe not so much in price. Maybe it goes down to the 95, 93s, but it could be time. And that's really what I want to be looking at, which means that rallies, and in this case, the downtrend line in the daily would be at just under 102, depends when it is. Nice, very nice, 3-4 points on the upside. Nothing to complain about, complain about, 4%. If you're playing the SOXL, it's even more because it's 3 times long. But I just think it's a little dangerous, and I have to make a big decision here. I had promised myself I'd try my best not to be enticed to trade the long side on indices that I really want to be either back on the short side or to start the short side. So this is going to be a tough thing for me. Itchy fingers, Chapman. We'll see what happens. But the SMH is on the day, not bad at all. Yes, if we're going to move higher, the SMHs could be the ones that break to the upside first. Is this the low? No, I don't think this is the low in the SMHs. Could be another one of the many lows that we've seen on the way down, lower lows and lower highs, and I think there is a chance for a decent bounce. We'll see. So good luck there. Next question is Greg wants to know about IRBT. I'm just doing these quickly because I might run out of time. There's a lot to discuss. I want to go through each of the indices individually. So IRBT is, in fact, iRobot Corporation. Yeah, I'm looking at this. I say, I know that symbol so well. I just never had time to sift it through my mind. It's making a potential double bottom in the daily and the weekly, funnily enough. The daily has broken the left side low of just 5 days ago. The MACD is still hinting that there's more to come on the downside. So is the stochastic. So I'm just going to say this. Greg said, morning, Basil. Would you take a look at IRBT? It is testing the left side low of an arch from absolutely, that's what I was just discussing. Significantly lighter volume. I want the weekly chart. That's the volume I'd be looking at. 20.334 million the week of the 9th of February, where it smashed from the most recent high in the 93s. That candle high, that month, that week of the 9th, had a high of 89.66. It did have a low of 55.77. And just to put it in context, I'd say that the 34-point decline in a stock like this, let's see, 34 points from, let's call it 90. Yeah, I'm talking about a 27%, something like that, decline with a decent bounce to the 9-period moving average. Couldn't break above it, making an H formation. So that was 20 in the 20 millions. We're in 931 this week. Last week was maybe 10. Give it a break. No. That candle smashed to the downside is very significant. What I will say, Greg, is, let me see you finish. I don't have a position now. Oh, you don't have a position, but did have one much higher up that was sold for a profit. I do remember that now. I've been waiting for this test to possibly take a new position. What does your crystal ball say? Two things. My crystal ball says, you are the one. I do remember, just kind of, it's vague, but I remember that there was a period that you were in and you timed it really well. So number one, I'm going to say rely on your own timing. And now I'm going to do my analysis. My analysis says that the 55.49 level in IRBT, trading at 57.40, down 96 cents today, that 200-period exponential moving average from the power of the move of the 9th of February in the weekly chart suggests to me that that will be tested. Now, the big thing will be that the monthly chart is making lower lows and lower highs, and it has a one-to-one extension, which should take it a little lower down, which would take it towards the 55s. So here I'm going to do this. And that extension takes in, and I want to be clear, what happened to my pencil? There it is. Okay, right there. That's one. And it was a Chapman wave. I believe this is a one-to-one parallel extension. Remember, that's my own technique. There you go. One-to-one, and went to last week. So this week, it would be an extension of about 1 bar, which is okay. I prefer to have the same exact parallel angle. And that says that, yep, there it is, 51. So I'm saying that this whole idea of going to the 55s, I would have patience, especially since the whole robotics, bots, B-O-T-Z. B-O-T-Z is the symbol for the ETF. And look at that, sitting on the 9-period moving average monthly. Weekly is about to test this left side low. The daily is testing it right now on the 200. I'm going to say to you, keep your eye on it. If your instinct says start a position, go ahead. My sensibility says the power of the move down says that even if there's a little bit of a bounce here, we'll be back to the bots trading at 22.92, down 18 cents to test the 22s. If it closes under that, you're going to have to wait. So this is the area where if you want to experiment a little bit by testing, by having a little position, I see no harm in that. My eye says it's not done yet going down. In fact, the market is not done yet going down. You could have significant bounces, but no. So my answer is to wait, and that's on IRBT. GT wants to know about Boeing. So now I'm going to go to Boeing, and then I want to go to the indices. So Boeing itself is down weak. It's weak at minus 4.84 at 328. That peak F is significant. I still contend Boeing has made at least a significant intermediate term top. I'm totally wrong if it's trading at 357 by the end of May without having tested more significant lows towards the low 312 area, 310. I would even think a little lower. Okay. Now, what I want you to do is this. So that'd be a UTX. Yeah, there's nothing to see there. So Caterpillar is the next question I had. Caterpillar's trading down 310 at 141. Peak D, I can now put a down arrow in the daily. This is significant. I just feel strongly that this sell mode that was started in January the 26th in the Dow and the S&P daily charts, then went to the weekly charts, is significant in that it is using a lot of time. Now it's going to do the retesting of recent low, now meaning month of May, is where we're going to start to see, can it retest? Will the S&P still hold above its low of February the 9th? The Dow has already touched it and then rallied off it. It's going to be really important. So here we go. Caterpillar's down. Now, before we go off into the break, the QQQ, as I said, is now just down a little bit. But look at this. The IWM is down 74 cents. It broke. Remember, that's what I was saying. Don't be confused because something's holding that is fantastic. No, it was holding, but it wasn't breaking upside. Now it's breaking downside. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the E-mini is at 2633.50. This will be the first time, based on the pure technicals, that if there's a lift off here, which I think is occurring, we could get to the 2635s quite quickly, and that'll be an overlapping leg C, and that should go to a D in the 2-minute chart. Word should take it to the 2638 200-period exponential moving average, and then we do another retest to see how much strength is involved. All right. Now, a couple of questions I had. Let's go back to there. Did it. Okay. Now, what I'm going to do is this. In the den, there was a good question earlier on, and I just want to see where it is. Did you cover crude oil? No, I'm going to do that right now. Let me just do this because we're going to be moving a little quickly right now in the E-minis after all that selling pressure is alleviated, at least briefly. So I want to get to this and get it done so we can go back to some live charts. The crude oil right now is stuck in a range. Remember, I circled this and I said it's only a circle. It's not one of those rectangle Chapman wave rectangles just yet, especially if it takes out the low that was made on the 25th of 67.11. And so far it's at 67.67. And the low today is 67.21. So we've got 12 cents to go. It's going to be pulling back. That'll be negative, and that'll suggest that there's going to be a little more time involved in crude oil, but price is still holding really well. So this is what I wanted to say. You remember, let's just do this now. I'm going to take time if you don't mind. Remember, I used to have this whole thing about the 200 period exponential moving average. I remember years ago, years and years and years ago, when I first met Larry Pesavento, I was giving a presentation. I gave a presentation. We had this big meeting Tommy set up down in Clearwater, and then I was in the room for. I can't remember. Did I go first or second? No, I had already done a presentation. And, I'm all about moving averages and all sorts of things. And Larry was just involved with the Gartney and the butterfly and Fibonacci retracements, which is kind of what he's stuck to for all the years and does fantastically. So I remember him giving a little talk, and then he said, and for any of you who listen to those people who talk about the moving averages, the 200 moving average, anything, just leave the room. Or he said something like that because he really believed in his methodology, and there was this deadly silence. And a lot of people just looked at me. I thought, I'm not bothered by it. That's his technique. That's the same way as I wouldn't have said it because I do use Fibonacci, but I didn't really understand anything about the butterfly or the Gartneys. So I would have sort of shrugged my shoulders because I don't use it. And if you're using my technique, stick to the technique. So I had a chuckle. But now let me show you something, why it's so important not to rule out any little icons on your page that are important. It could be a tiny little doji candle. It could be a gap. It could be a particular candlestick pattern. You know how Steve Rhodes always talks about candlestick patterns. It's very important to him. So look at this 200 period moving average. It was really important when it made this yo-yo sine wave action right there back in July of 2014. But when it broke down, the moment it broke down on the 29th of August, this is a weekly chart, the week of 29th of August 2014, it tried desperately to tag the line, and it couldn't get above it. It could touch it, and then it fell. And then what did it do? It went from the 120 area. Well, it sounds like the price of the dollar. You remember back in the 120 area. Anyway, it goes from 120, and you didn't even look. I mean, I'm going to make this bigger. No, I'm not. I'm just saying every time it pulled back and rallied, it was way, way, way below the 200 period moving average. But wait a minute. All of a sudden, crude oil, since it tried to get there for the first time back in the week of 26th of January when the Dow S&P made their all-time highs, it tried to get to the 200 period moving average and just missed, went a little bit below the 9 period moving average, and then used that 9 period moving average as a support line to bounce and finally break above the 200 period moving average. Is it important? No, it wasn't important at all. Is it now important? You betcha. Now it is acting like a magnet. It is acting like a, where am I? In the weekly chart, it's acting like a magnet. And very soon, if crude oil is able to get to 72 and hold there for 1 or 2 weekly bars, it'll become support. And if it goes to 75, I won't even be looking at the 200 period moving average anymore because it'll be way below the 67s. I don't need it. You only need the technique when you need it. Hope that makes sense. So the weekly chart, I think, is still a peak C, and I believe it should go to a D. So that says the parameters to watch for crude oil, 66.50, a close below that would say, uh-oh, it could go lower from there. 66s could go to the 65, 64 area. But a close above the high that was made on the 19th of April, above 69.55. This is the continuous contract. That'll be very positive. In the meantime, back at the ranch, what's it doing? Chop, 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 driving everybody crazy for the past week and a half. And that's what happens when it consolidates. All right, that's that. Now, crude oil. I want to do high-grade copper. High-grade copper, we had a plunge the other day, plunging again today. Very negative. Daily, weekly chart says, hey, I'm just in the trading band. Don't get too excited. But at 304, if I take out the low of 2.96 made on the week of the 30th of March, I'm going to that 200-period moving average of 2.91. I need very much to get to the 315s and hold there for a little while if I'm going to show any strength at all. Very tough to do. Okay, TLT, a lot of questions lining up. TLT had a nice bounce for 3 days, giving some of it back down 49 cents at 118.61. That says that we've got to keep an eye on our triple yield chart. So far, they're still just consolidating those yields. Let's come back to that if we have time. It's not necessarily right at this particular moment. And I think I've covered everything. I'm going to go to the TVIX for a couple of people, one in the Dan, an email. So Rob wants to know, oops, where did it go? Rob says, Basil, hoping you could look at the TVIX, not acting really well in light of the decline today for the major indices, meaning it is not rallying very sharply, considering we're down 300 points in the Dow, 13 points, only 13 points in the S&P. So a possible indication of a bounce before another leg down for the major indices. Curious your thoughts. Thanks as always, Rob. Rob, you know, I'm kind of with you. I think that I was asked yesterday about Ben from Tallahassee about what I would consider for my subscribers to my opening call as the point of pressure where I'm saying now I think I want to give myself a much bigger stop as we buy the Dow, and maybe at the same time I'll buy the Dow and I'll buy the 2 or 3 times long. And when I see that happen, that's going to be because the VIX index is at another one of its big spirals to the upside, and you can see a pretty decent, more daily going to weekly type rally than just a couple of days and then fail. So that's what I'm looking at for the TVIX. Now, how do you get ready for that? This is going to be real tough. Oh, we've got, wow, the time's flying. We've got a break coming. Rob, I'm going to try to deal with that. I'll deal with it in, what's today? Tuesday? Today's Tuesday. I'll deal with it in 3 segments. I'm going to do a segment very quickly when we get back, and then I'll do another one tomorrow and the next day, and I'll show you what I'm thinking. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So a largely public traded uranium company based in Saskatchewan, Cameco Corporation, trading up 61 cents, up 5.79%, 11.14 leg D in the daily. It'll be leg D in the weekly if it can get above 11.18. Real close. And the monthly is improving. Just wanted to mention that was mentioned in the den. Yes, very nice chart. So I'm going to mention uranium, and then I'm going to wait to see what kind of fallout there is. Little double pun there. And now let's go to, and the support is at 10.47 to 10.34 in the shorter term. Okay, so what am I missing here? I'm missing gold, down 11, 1307. We've been talking about this for a while, the weekly chart of 1305. 1306, 1305, 200 period exponential moving average. It's been my target. It is there now at 1307. It actually went lower intraday, went down to 1302. And that monthly chart was looking really good. Then it was holding very well. And now the candle has started off May underneath the 9-period exponential moving average. Still, the weekly chart is the one that's giving the deeper H formation with very poor technicals. The monthly technicals are still pretty darn good. So I'm watching this real closely because I'll tell you why in a minute. Gold and silver are acting as if they are not responding to world events as if there's a crisis coming. They're responding to world events as if, like a Raytheon, which is plummeting minus 4.7 down 200 today after hitting just about 230 just a week ago. It's down 30 points, was it 12% or something? And a GD, General Dynamics, plummeting down 541 at 195. It's saying that world events are much better than they were just a couple of weeks ago. And this is something I've spoken about. I didn't know what on earth could produce a very sharp pullback in the PPH, the Power Shares Aerospace and Defense ETF, that I said I believe that it's going to have something to do, maybe it's peace, maybe whatever it is, it'll have to have some kind of connotation that says that the military side of this whole defense area, not aerospace and defense, is going to be failing. And that's exactly what we're seeing. That's a wonderful sign for peace, but maybe not a wonderful sign if you just recently got long these stocks. Now we're going to go to silver. Silver's down 16.14, down 0.25. Lousy chart formation in daily, lousy in weekly. two H patterns looking very much like at 1614 wants to test the 1590s, and the monthly chart not very good. And that leads me to what? It leads me to the dollar. Although the dollar's pulled back a little bit from the 92.57 intraday high this morning, huge leg E. I'm calling it an E. I can give it alternate counts. There's no need. It's an E. It's above the 200-period moving average of 90.19. We've been long since the 6th of April. Been long a couple of times since the low was made in September last year. And this time I said we want to hold long because everything I'm looking at suggests it's just a slow incremental build-up of the technicals of the weekly chart, but that wasn't the point. The major point was the soft W formation in the stochastic in the monthly chart, having held 4 attempts to break and hold close below the 200-period exponential moving average after that initial dip lower, and really showing nice relative strength in the stochastic. It's only at 17%, really needs to get to 23, 25%. That's going to be much safer. But the MACD histogram has been improving, still a long way. I would say that the dollar has to get to the 94s, 93.70s before you could see the MACD even start an attempt to cross positive. There's time involved. This is a fabulous breakout. Look at this chart right here. You remember the 200-period moving average we just spent time on talking about in crude oil? Well, back here, right there, back in 2017, I did that a little too quickly. Back in 2007, now I have to do it the other way. Oh my goodness. All right, let's just do this. There it is. Back in 2017, the little doji candle right there, the week of, no, it was the 11th of May. Oh, exactly a year ago. 11th of May, 2017, it made a high at 99.89 after that major top on the 3rd of January at 103.82. Pulls back, tests the 200-period moving average, treats it then as resistance, goes above it as support, and it plop. Once it broke down on the 12th of May, that was it. You haven't heard me talk about the 200-period moving average in the weekly chart. I'm sorry, the daily chart of the dollar. Why would I? Until just recently. And what I'd say is if the dollar ever gets to 90, right there, 91.50, and they can even have a chance of breaking a little bit higher, the magnet of the 200-period moving average of 92, I think it was 92.20 something. Yeah, 92.22 would become in force. And if it broke above, you could start to see a little hiatus as it goes up and down around about this 200-period moving average, trying to build a really good base in the 91s. That's exactly where it is. I love the action of the dollar. It's just fulfilled what we wanted to see, which was a test of the left side high of 92.64. That was the week of the 12th of January of this year, and today's high is 92.57. It's 7 cents lower. It's right where we wanted. The weekly chart is 92.84 as a 200-period moving average magnet. MACD is good. Stochastic's improving a lot in the weekly at 66%. It still has a lot of work to do. I love the action of the dollar. Okay, now let's go. Now we've covered almost everything I wanted. EUR USD. Ooh, long opening session. Pulling back sharply, touching its 1.97, 200-period exponential moving average is real close, almost touched it today. That weekly chart is now not looking so good. I might have to call this a peak A, B, C, D, E, I'm going to do that, E/C, to say there's a chance that we had an instant restart way back in May, I think it was, of June of 2017. And this really is just the fulfillment of an extension. Then went to G/C. Remember, this is how I got into the instant restart, which eventually does go to a D. In this case, it went to a D/B. Now it's in an E/C. Looks to me like it could fail. This is looking intermediate term as if a lot of work has to be done to repair, to go from 1.20 into the 1.23s, which is really necessary to change the projection, USD JPY, the yen, 109.68, very sharp move up. Also in a leg E, just like the dollar, they're in unison, but only a single leg A to the upside in the weekly chart. Wow, we've covered a lot. I'll be back. A whole bunch of emails still to go through. Basil Chapman, Tiger Technicians Hour. Let me just check with Dan to see. There were a bunch of questions. CCJ, I did that. Yes, I'll be right back. Dow's down 200.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Stay tuned, folks. Got great programming coming up today. I just want to show you, look, the weekly chart made a peak C1, C2. Very often we've seen historically that eventually you often get those Ds. So I'm going to be watching this closely at 31.30. Will interest rates, will the yields start to rally some? That's going to be tough because they don't need to right now. They've already accomplished everything they need. They can take a breather. They don't have to take a breather. So we'll be watching this very closely. I'll talk more about it tomorrow. A couple of questions I had was XHB and Home Depot. Home Depot, let's do first because it had a fabulous run to the upside. My thinking was it had made a peak C, but it's probably a great peak C. And it looked, everything it looked like it should be a D, but it's pulling back from a peak C, having made a major top at the 207.61 level in the second day of February. And this is a real problem because I think that the home builders are struggling. We are not short of any home builders right now. Took our gains and we're waiting for another rally. And I think we'll get another chance to do that. we had Pulte Holmes. It's bouncing a little bit now. It's no big deal. I probably could have held the short position, but I just want to take nice gains. So yeah, look at it. I'm looking at it. I'm suggesting that XHG, is that XHD? That has to be a $sign. X, if I got that right, XHD. So the question I had was XHD. That's not right. Oh, XHB. A little distance there. Okay, SXB. This is the builders, I believe. Yep, this is the S&P home builders at 38.94. Trying to form some kind of a bounce base here, but that Eiffel Tower, left side, right side, boom, straight up, straight down. In the weekly chart suggests there could be a bounce, but that at 38.94, the 38s to 37s in the XHBs are going to have to be tested for a little while longer. It's going to be really important. The question about what in the portfolio, what are we doing for subscribers? Well, we have the remaining longs we have. We got stopped out of one yesterday, or two yesterday, and we've got two that are holding really nicely today. In fact, one is up very nicely. It's at 10.40, and we got in at, I believe, 9.75. So that yesterday. So that's pretty good, or the day before. So yeah, hold tight. You've got Steve, you've got Dave, you've got Tom, you've got Andy coming up. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.